Now, Lorna Fielker studied housing at the University of the West of England and has extensive experience working in social housing. She's a former board member of the Chartered Institute of Housing West Region. Lorna was a supervising director at Community Housing Aid in Exeter from 2009. She joined Carers in Southampton after spending 12 years working in social housing. Lorna has a broad experience in all aspects of housing issues. She interacts with and involves people who receive services to maintain high quality standards and to ensure that they meet individual needs. Whilst working at Carers in Southampton, Lorna has been moved by stories of the carers that she spoke to. She recorded, "The support they provide to family and friends is amazing. They do this with love and dedication and often self-sacrifice. Being part of a project that can make a positive difference to the lives of carers makes me feel that as well as doing a job I enjoy, I am giving something positive to carers in our community." Lorna coordinates the Carers Assessment Hub and takes the lead on carers card inquiries. She works with the Portswood Dementia Action Group on activities to make Portswood a dementia-friendly community, and works with the Admiral Nurses Service to run a memory cafe in Manston Court. As you'll see by her badge that she's wearing tonight, Lorna has been a prominent campaigner for Shout, which aims to deliver evidence-based economic research to make the case for bricks, not benefits, and to end the national housing crisis in a generation. As she tweeted, "We are all responsible for a society that we live in. You can influence what happens if you speak up." Now, as Shout has pointed out, there is a widespread consternation from many people within the UK housing community and politicians that for every £100 of taxpayers' money spent on housing in Britain, £95 goes towards the ever-increasing housing benefit bill, and only £5 is used for building houses. Shout is keenly conscious that we need independent, verified, reputable research and debate on this. It is their intention to make the provision of social rented housing a core element of local and national government policy to solve the housing crisis. Clearly, the only way to meet the level of supply required to solve the housing crisis is to get government investing efficiently again in the provision of homes. Shout has pointed out key elements for reinvigorating government investment and government policy that involves to invest at least 100,000 social rented homes per year, to revolutionise right to buy so that if it stays as a policy, every home should be replaced. And finally, they insist that we should recognise the contribution social housing makes to economic and social well-being. Finally, but not least, Lorna has been selected as our Labour candidate for Swaithling in the May 2018 City Council election. Tonight, as I've tried to point out, she is extremely well qualified to lead our debate, a property-owning democracy. Thank you.
Thank you. Thank you very much for inviting me to come this evening. So, we're in the middle of a housing crisis. Affordability is an issue across all tenures and there is a serious lack of supply. I'm not here to look at that big picture. I'm talking about one of the many housing policy areas that we need to consider when we're developing our strategy for homes for the future. I originally wrote this in 2010. It was in response to the coalition government reinvigorating the right to buy scheme for council tenants. This has seen just under 2 million council homes transferred into private ownership since 1980. In July of this year, government issued a briefing paper on the introduction of a voluntary right to buy scheme for housing association tenants in England. The Conservatives' position is that tenants of all social rented housing should be able to enjoy the benefits of home ownership, so it seems timely to update the earlier work. So we're in a position where ownership has fallen to its lowest supply in the last 30 years, but it still represents 63% of the available housing stock. This was less than 10% in 1910. Almost 60% of private tenants and 30% of social ones aspire to ownership. The growth has been promoted by numerous government policies since the 20s, which aim to make ownership accessible to those on increasingly lower incomes. The increase has been achieved through the use of financial instruments such as mortgage tax relief, deregulation of the financial services sector, introduction of the dreaded right to buy, and low-cost schemes such as shared ownership and help to buy. The promotion of ownership as a tenure has focused on the perceived positive benefits of security of tenure, acquisition of wealth, and choice in relation to the purchase, sale, maintenance, and improvement of the home. Peter Malpass, who is my housing hero, wrote extensively on housing policy and practice, and he stated that owner occupation as an individualised, market-based form of provision allows consumers to reap the full effects and advantages of ownership, but also heaps on them the costs of any disadvantages. I'm going to explore if those benefits outweigh the risks for those low-income households. So we've got the ability to move, choice of location and type of property that's often cited as a benefit. It's not as accessible to those who are only able to purchase at the bottom of the market. The level at which the purchaser can borrow, as well as additional costs of stamp duty and removals, are going to impact on the ability to either move into the home ownership market or from one property to another. And it's been argued extensively that owners who purchased under right to buy may have been better off remaining as tenants because they would have been eligible for a transfer of housing if their situation had dictated the need to move. Housing market also sorts the population into location by the level of house prices in different areas. Low-income owners are likely to find themselves priced out of areas with the best access to school, transport links and other local amenities. Moving on to borrowing, the popularity of interest-only mortgages up to 2012, when the majority of lenders stopped offering them, enabled households to borrow higher multiples of their income. Monthly mortgage payments only cover the cost of the interest, and borrowers are expected to pay into a savings product which should pay off the outstanding capital at the end of the term. With a fifth of current resident mortgages being interest-free, there's a risk this is going to mirror the endowment scandal from the 90s, and savings aren't going to be sufficient to cover the capital. Low-income households, nearing the end of their earning life, may find it difficult to raise further finance to bridge the gap. And the popular financial press have reported in the last year of the ticking time bomb of people reaching the end of their mortgage period without sufficient capital to repay that loan. It's probable that many low-income owners are going to fall into this group, as they'll be likely to have taken out the mortgage based on their ability to afford the monthly costs, and not so likely to have had additional income to run a savings policy at the same time. Loss of income is a real risk. Lenders may treat income from benefits differently. Owners whose previously earned income has been replaced by welfare benefits may find this is going to prevent them from remortgaging to raise finance to make any required adaptations they need. The same issue is also likely to prevent them from obtaining another mortgage to enable them to move to a more suitable home. Low-income households are less likely to have savings or insurance products to protect them from issues relating to fluctuating income and job insecurity. There's a marked difference in the amount of assistance that's available to renters and owners during times of financial difficulty. Tenants who suffer from loss of or reduced income, either through changes in employment, sickness, or relationship breakdown, are able to claim the housing element of universal credit to help them meet the costs. The eligibility for this payment starts almost immediately, although we have a 6-week wait for people to actually get any cash. In contrast to this, homeowners losing their entire household income have to wait 39 weeks from the date they make a claim for an income replacement benefit before they're entitled to support for mortgage interest payments. This only covers interest at the government set rate, which is currently 2.61%, and even this is going to be abolished next year, and it's going to be replaced by a loan that's repayable with interest. Any owner who's only losing part of their income isn't entitled to this. They're often losing any physical or financial assets they own as they dispose of them to meet the mortgage costs. Renters with less than £16,000 of assets aren't required to do this, although those with over £6,000 will not get their full rent costs made and will have to make some form of contribution. A mortgage rescue scheme was launched in 2009, and this was in response to the economic downturn that ran for 2 years. Only owners that would have been owed a housing duty by the local authority were eligible, and it mainly focused upon those low-income households who were already at the bottom of the ladder and unable to trade down. Its aim was to keep people in their homes by either offering a shared equity loan or by the housing association purchasing the property from the lender and the homeowner becoming a tenant. 629 households were assisted through the scheme between January 2009 and March 2010. This is against an overall figure, which is quite shocking, of 64,302 homeowners who had their homes repossessed during that same period. It's interesting to note that over 97% of those 629 households became tenants rather than shared equity owners. And I think that seems some small admission by the government at the time that ownership is not necessarily the best option for all. Government's intention is that the market will provide a solution to this loss of income through the purchase of mortgage protection insurance policies. And in line with all policies, they come with exclusions as to when claims can be made. Generally, workers not in permanent employment are not eligible, and they're also unlikely to cover other causes of arrears, such as relationship breakdown and reductions in income. It's also likely that low-income households trying to keep monthly outgoings down will either choose a product with less cover than they require or not actually take one out at all. It's also been described as a market potentially affected by adverse selection. So that is those most likely to become unemployed are more likely to take up the offer of insurance, and a moral hazard, stating that people with insurance may be less anxious to avoid the insured against outcome. It's argued this leads to close scrutiny of claims by the insurer, resulting in up to a third of them being rejected, and suggests that this type of insurance offers poor value of money. Acquisition of wealth. It's commonly considered to be a major benefit of ownership. This perception is fueled by figures such as those released by the Halifax, stating house prices increased by 273% over the last 50 years. This gives rise to the belief that property is a solid long-term investment. This doesn't really give a picture of how personal wealth is increased through the ownership of property and whether that is a fair distribution of wealth. Despite the increase in ownership of the tenure, there remains deep structural inequalities to that distribution and who is making those financial gains. The increase in value is usually dependent on the type of property and its locality. Owners in areas which previously had low values have benefited from gentrification of urban areas and the rise in popularity of some rural areas as a location for second homes. In general, low-income, working-class homeowners are more likely to own property in less attractive, cheaper housing. Significant value increases are more likely to occur in the more prosperous areas where low-income owners were less likely to be able to buy. Even when prices have risen, the asset value of a home is not always realisable, as sale is usually accompanied by another purchase. It's only when the owner is actually exiting the market or downsizes that the asset can be converted into cash to be used for other purposes. This is more likely to be of benefit to those who are able to purchase reasonably sized homes in prosperous neighbourhoods. The low-income owner is less likely to have had the ability to trade up from their first home to trade down in the future. Additionally, the boom and slump cycle which the market seems to follow has an impact on the acquisition of wealth. Owners purchasing during the boom that need to sell during a slump may find they're unable to do so for the price they originally paid. Better off owners, while suffering a financial loss, are also more likely to have the resources to manage this situation. This was illustrated by the slump in the 90s. Lower income households were encouraged to take out high loans in relation to income in the 80s, and rising levels of unemployment left many of them unable to sustain their mortgage payments, and the housing slump prevented them being unable to sell their homes to repay the debt. The freedom to improve property, to either increase its value, adapt it to meet lifestyle choices or health needs, which is often cited as a benefit, also carries with it the responsibility to pay for the improvements, repairs and maintenance. Low-income households usually have mortgages that require a high percentage of their monthly income to meet. I wasn't able to get an updated figure on this statistic, but I'd be surprised if it's improved much. In 97-98, low-income owners were spending 28% of their gross income on mortgage costs, compared with just 9% for the highest group. This leaves little after other living expenses to pay for unforeseen major repairs, as well as general maintenance to prevent the property from becoming run down. There was some research published in 98 that found that low-income households had often bought run-down properties which they then didn't have the funds to improve or maintain. It's likely that they used their available lending to buy with the belief that they would be able to fix it up and make a profit at a later date. Research on low-income owner occupation in 1979 reported this exact same issue and stated that government policies seem to consistently ignore the inescapable fact that the income of residents is too low to meet the cost of better housing. We don't seem to learn from the past. The latest English House Condition Survey reports that 18% of homes in private ownership do not meet the Decent Home Standard, compared to 13% in the social rented sector. It does need noting that this figure was 35% when I wrote this paper, so there have been significant changes in that. They no longer report on the average cost to make a home decent, but in 2007 it was £6,860, but that around half of non-decent homes could be treated for less than 2.5. Given these relatively low figures in relation to house prices, it's reasonable to speculate the majority of non-decent homes are owned by low-income households. So the right to buy enabled social tenants to purchase their home at a generous discount. And those former tenants who bought well-built homes in prosperous areas have benefited from the increase in property prices. Owners of leasehold flats have not fared as well. Some has found that the annual service charge and ad hoc charges for major repairs have caused financial hardship. The introduction of the Decent Home Standard in 2000 had a particular impact, as local authorities sought to improve blocks which had been underinvested in over previous years. Some leaseholders were faced with bills in excess of £10,000, and there were leaseholders whose income and ability to borrow against the security of the property was not sufficient to meet these costs. After the awful tragedy at Grenfell, the government announced that funding would be made available to make tower blocks safe. It's being very selective in what is classed as essential work that is eligible for that funding. Many councils with retained stock are covering that cost and not passing it on to the leaseholders. Tory Run at Wandsworth is not one of these. They're passing on up to £4,000 to their leaseholders to pay for this work. Over the past century, successive governments have promoted home ownership on one hand, but then withdrawn those support mechanisms such as full employment policies and tax relief that reduce the risks on the other. Whilst half of all poor people in Britain are owners, they only receive a small percentage of the financial support provided to help low-income households with housing costs. We have a current job market based on the idea of a flexible workforce and self-employment in the so-called gig economy. The requirement for flexibility comes at the expense of job security. Rather than the now old-fashioned notion of a job for life, people are expected to change jobs regularly and manage periods of unemployment, putting low-income homeowners at risk of falling behind with their mortgage payments. This, coupled with the limited financial support available, makes ownership unsustainable for people whose main source of income comes from the insecure market. As mentioned earlier, during property slumps, households facing either a reduction or total loss of income may find it difficult to sell the property, or that the achievable sale price doesn't cover the outstanding debt. Further issues arise when, after the sale, the household may find they need to approach their local authority for help and are considered to be intentionally homeless as they chose to sell the property, which worsened their housing situation. With public spending decreasing, local authorities looking to further limit their duties may also consider if the borrower should have foreseen that they could not repay a mortgage with high monthly repayments in the long term. To conclude, home ownership is commonly considered to be the most secure form of tenure that gives households the opportunity to choose where and how they live, increase their personal wealth, and provides their future. However, it does seem it's only secure if they have the financial means to maintain it through changing circumstances. Low-income borrowers are more vulnerable to the risks of ownership caused by unemployment, reduced income, relationship breakdown, illness, and a lack of suitable public or private safety nets. The financial security offered to renters in the form of housing support payments when their circumstances change, and the landlord's responsibility for repair and disrepair make a compelling argument that low-income households likely to experience fluctuating incomes would have far greater security in the rented sector. Wealth creation is experienced by the better off who have the ability to trade up and down the housing market and the funds to improve the value of the property. The low-income owner is less likely to rise up the ladder in the first place and need to use a higher percentage of their income to maintain payments. The manifesto promises that a Labour government will build at least 1 million homes in its first term of office. This is great. I think we need to do more. I think it's vital as well that as a party we start to counter the narrative that property is an asset to be used to create wealth and start to think about secure homes for families and communities to thrive when we consider who these homes are going to be aimed at and what type of tenure they're going to be. There's some really positive stuff in the manifesto to improve standards and security in the private rented sector, which is needed if that's going to be a response. When it comes to social rented housing, I really think that we need to go further than pledging to suspend the right to buy, but follow Scotland and Wales and actually abolish it. And that's, yeah. Thank you very much.